At the moment in the market, everyone's talking about the volatility and we're all expecting some sort of pullback. How much cash do you hold in your portfolio if you're allowed to do that? And it's interesting, we saw quite recently the volatility in the market led by the US, and everyone panicked. And apparently everyone had been expecting it, but then panic sets in. But what it did show, because it rebounded so quickly, there is still a lot of capital out there. There are still opportunities there. We think it's at the smaller end of the market. We don't think about indexes overall, and we don't invest ever on a relative basis. Understand the company, understand the company, where it's going, how it's going to get there, and then risk adjust how much capital, how much you're going to invest in each company. And as they prove themselves up, invest more rather than less. And the ones that don't work, be brutal. I think generally there's a reasonably bullish. I mean, the rebound showed that there's quite a bullish feeling out there, potentially unjustifiably in some areas. But for us, it's very much about company specifics. All this noise that goes around market movements and arbitrary index numbers, it's dangerous to get caught up in. So that's where you lose your money, when you start to react to that. But if you keep your focus on underlying businesses, because at the end of the day, as equity investors, we're buying equity in a business. We're not buying a price or a code or anything like that. We're buying part of a business. So you've got to know the business, understand the context the business operates in, and if there's a big economic downturn, will it have an impact? If so, respect it. But if it's still in a growth phase of its life cycle, just continue to back yourself.